Welcome to the first episode of the Orderflow Bootcamp. This is chapter 1, basic market knowledge about trading sessions, about what futures is, everything. But before I start that, let me show you some of my credentials. 1K payout, max payout on Lucid. And let me bring you to my dashboard and show you my calendar. 6K in total this month. And I'm going to be honest, I came from nothing. January, I had 56 cents in my bank account, and I worked my way through here. I've been trading for a while, a long while. I was stuck with ICT, it just didn't click with me. I know some people that does click. But I decided to rely on the institutional backing, on data, on market data that exists, that is given, that is level 2 data. And that is order flow. That is the power of order flow. And today is the very beginning. You decided to click on this for a reason, because you want to learn order flow. And I'm going to be honest, only 1% of you guys will watch this full video. Actually, let me rephrase that. Only 30% of you guys will watch this full video to the end. And then out of that 30%, only maybe like 10% of you guys will watch the next following videos that will come every single day, by the way, with the free content that gives everything that I know straight into your head so you can do the same. And then, guess what? Only 1% of you guys will actually take notes, will actually rewatch some of the videos that are important and finish the whole series in the entirety. And that 1% will be the one that succeeds, because the statistic is 90%, 99% of business owners, 99% of traders fail. You can see that being true for TGR scores. Even though he got exposed recently, his bootcamp is very, very evident that people do not finish what they are saying. People say, hey, I want to learn this, hey, I want to start this, but they don't finish it. So prove that you're different. And today is going to be the very first video, very first day where I'm just yapping to you. You can chill. It's going to be easy, but it's going to progress more and more intense every single day until you feel like you are overwhelmed. And I do not recommend you watching all of them in one sitting. I do not recommend you watching them in 2 times speed. Actually, maybe 1.5. But let's get started. Welcome to chapter 1. Are you ready? Change your life? Chapter 1 is about the fundamentals. What is trading? Let's get straight into the video. Okay, this is a stock futures. This is futures. I will be going over futures. And this is our mascot, a corgi. Okay, the basics. Let's go over the slideshow. Futures trading. What is futures trading? You guys might be asking, you guys might be unfamiliar with it, might be confused about it. It's just gambling, and to some truth, you are correct. It has aspects of probability into it, but the way I do it and the way that world-class professionals do it, because I do it the same way as them, just different discretion. Right, discretion is something you build into with time on the charts. But the way we do it is we take calculated risks of probability into our favor. And in how we do it is we look at level 2 data, which is, you probably are hearing a mouthful of words that you don't understand, but I promise you as the series goes on, you will understand. The level 2 data shows exact limit buys, market orders, market makers. Market maker is the DOM. You can see all that. And you can be like, hey, there's a very, very aggressive guy buying like 500 contracts at this level. Price is probably going to respect him, right? Price is probably going to bounce, because it's never definite. If somebody tells you they have a definite 100% win rate strategy, run. Run as fast as possible away, because that's not possible. And I'm going to tell you the truth. If you think it's gambling, then this whole life that we are living in is also gambling. Weddings have, I don't know what the percentage is for divorce, but I think it's like 60%, right? Or like, I don't know, 40 or 30. There's a percentage in everything in life. There's a percentage, there's a chance that you are unemployed after you go to college. There's a percentage that you get accepted into college. You're taking a gamble when you file for admission. You're taking a gamble when you try to apply for a job, right? Maybe it's a 10% acceptance rate. You're taking that 10% gamble, right? You're taking that application fee for maybe housing. That's a gamble. You're rolling a probability. You're trying to build your application status so you have higher probability of getting in. It's like shooting a basketball. There's a shot percentage. You won't make every single shot because that's physically and mathematically not possible, because there's probabilities and there's chance and there's randomness in our lives. So let's go deeper into it. Once now that we differentiate what is gambling and what is statistics and probability and an actual thing, like an actual career path that you could choose, actual thing that you could make lots of money from. I know a lot of people are making so much more than me. I'm just scratching the surface, and I'm trying to grow as I help others too. So what are futures? Futures are contracts to buy and sell at a future date. So current price is this price, but right now you're trading the transaction of like a future date. It's kind of weird. You don't have to fully understand this. I promise you, you don't have to be an engineer level intelligence to make money. But there's a fixed price agreed upon today, and then it's just an exchange. The futures is just an exchange with different instruments that you can trade from. And yeah, we went over what is futures. Hedging and speculating. All right, hedging is banned from every prop firm. I'll go over what prop firms are, so don't even think about it. Speculation is basically, you think price is going to be going here. All right, that's what we're doing. We're using probabilities, using market data to say, hey, I think price is going to move up. Maybe, let's put a little bit of calculated risk on it and then see if it hits. All right, key characteristics. There's leverage. There is a daily sentiment. And then, contract sizes. Contract sizes are the amount of risk you basically put on. There is, for futures, NQ, which is the NASDAQ 100, which is what I specialize in. There is futures contracts for the micros and the minis. It's kind of confusing when you hear mini, you think small, but it's actually not. Micro is the smaller one, and then the mini contract is the larger one that is more money risk. I forget the dollar amounts, but micro is 10 micro contracts is one mini, and one mini's risk is pretty big. I use one mini risk because I have leverage at prop firms. I risk anywhere between 300 to 500 per trade. Try to make more, right? And liquid is basically the fills that you get, right? The entries and exits. How much liquidity is there? Liquidity is how much volume, how easy it is how liquid is your money, right? People talk about how liquid is your money, how easy it is to take out, how easy it is to put in. That's what it's talking about. Futures contracts, types of futures contracts. Yeah, there's oil, there's gold, right? Gold is a great example of, if you're really, really good at trading commodities, you can make a shit ton of money. I know some people trading gold that are making 100K months, 80K months consistently over and over and over again. I personally haven't traded gold in a very long time. I might look at it during Asia session. Sorry, I'm a bit sick. But right? Gold during Asia session is pretty good. Nobody ever trades wheat. I literally have, if you trade wheat and you can make money off of it, props to you. I don't know how you do it. But indices, that is very interesting. S&P 500, NASDAQ, you guys should know that. So ETFs for investing, but it's also indices, which is a basket, top 500 stocks, which is the S&P 500. Top 100 is the NASDAQ. I trade the NASDAQ. It's more volatile because it's top 100. Top 500, S&P 500 moves a little slower and lower risk. You know, types of futures that you can trade. There's currencies. I wouldn't touch those. If you want to trade currencies, go look up Forex on YouTube, you know. All right, a long and a short position. Basically, when people are saying a long position, you buy a futures contract and you're betting that the price will rise and you will make a certain amount of money per pip that you move up. All right, I'll show you guys right here. Okay, it's making me sign in. I did not. Right here, you see this? There's these numbers on the side that move. If I go to the 1 minute, you can see how 1 point, which is from 3, see the very, very last number, 3 to 4. So other things, pull up the price range, right? This is 2 points, sorry. This is 1 point in the NASDAQ. Now you can search up 1 mini is how many? 1 mini, 10 micros, exactly what I told you. And here's the value, right? 1 tick is what I showed you. Sorry, I said points. Points, ticks, interchangeable. So for micro, MES is $1.25 per tick. For ES is $12.50. You see that difference? $5 per tick. So right here is already $5. This tiny movement, right? You catch, what is it? 10? That's already $50. This is $50. You catch 20, and that is a day's worth of work. And guess what? You can catch 20 points in less than a minute. So you're telling me your time working 8 hours a day at this fast food restaurant or whatever is only worth $100? It's worth to someone a few seconds. Yeah, you'll never see money the same after this. I'm just gonna tell you that. Anyway, moving on. Short position, you're betting the market goes down, so you're gonna make money if the market goes down. Long, you're gonna make money if the market goes up. Cool. Technical analysis. So this is the big controversy, and if you are in the trading space at all, you will know ICT. You will know there are gurus that sell you something related to that, and maybe it works. I never got it to work for me. I traded ICT. I was unprofitable. I couldn't make a single dollar. Actually, I did. I made $500. You know, some people make a shit ton of money of it. There's a lot of people that debunk it and say there's no edge at all. I'm here to tell you that if you're trading prop firms, you don't need an edge. You really don't need an edge to make money. So you don't need to perform better than the market to make 100x of your money, right? I'll explain prop firms in a separate video because I feel like there's a lot to go over there. But yeah, ICT is technical analysis, right? You're looking at the candles, there's supply and demand. If anything that you're looking at just the candles, the candlesticks and stuff, that's technical analysis. You're looking at the chart, you're looking at moving averages, you're looking at VWAP, which is separate indicators and lines, right? VWAP is actually a very, very well-researched indicator. It's not, I don't have an account on right now, so it's not showing, but you can see over here, like these lines. VWAP is very well studied, and it's been used in hedge funds. It's been used in institutional trading for a very long time. There's people that say VWAP in the dark for a reason. It's because institutions like to fill orders in secret in the dark and VWAP, and then, without other people knowing. And yeah, cool. Okay, risk management is a whole series of videos. This is probably like in One Piece terms, this is probably a fighting arc that goes on for 100 episodes or like 10 episodes. You can never have enough of videos about psychology and risk management. But the general gist is that there's a stop loss and you exit when that gets hit. And your stop loss is determined price. So let's say you're risking 500 on this, your stop loss would be 500, which in terms of NQ, 1 mini, that would be 100. Yeah, 100 points, your stop loss. That'd be 500. That doesn't really make sense. Yeah, I guess so. I don't think the math for that is exactly right. Yeah, I don't think the math for that is right. But the stop loss is basically how much you risk and, where you are exiting, where your trade idea is over. Position sizing is how much you want to size into the trade, how many contracts you want to get, how much you want to risk. Leverage control, that's only needed for live accounts. We can go over that when I get a live account. But yeah, position sizing is very important for props. You know how much you want to risk per trade. I'm normally pretty aggressive for evals and pretty, I don't know. I'll go over it in another video. It's too complicated right now. Leverage and margin. This is for live accounts. There is margin. If you hit a certain number of margin, your position gets liquidated and you need to keep depositing more money to trade the amount of contracts that you're trading. That's what margin call is, maintenance. You don't need to know it right now. Two main strategies, like I said, hedging, which is a lot of options traders do this. You take a risk for like maybe a long here, but you take like a short somewhere else to protect yourself, so you lose little, but when you win, you can win a lot more. Speculation, yes, try to predict. Common beginner mistakes, over-leveraging, ignoring stop losses, which is emotional, like saying you don't have a stop loss, extending your stop loss, not respecting your trade idea, trading randomly, trading with emotion, you're gambling, go to a casino. Trading without a plan or strategy, going to the casino. You want to go to a casino? You want to go to the casino? Just go. Don't do it with trading. You're gonna lose a lot more money than going to a casino. Revenge trading, it's like you get mad that you lost this. You think as a beginner that you can avoid all of these, but I guarantee you, even if you know what you're doing, you're still gonna do all of these. Getting started, we're gonna skip that. Key takeaways. Futures is powerful. Futures can make you a lot of money and lose you a lot of money, etc. All right. So we're going to go over, this is Forex. Forex is foreign exchange. It's different currencies. It's not the same. I trade futures. You can trade whatever. It still applies. But these sessions, this is a great tool. Baby Pips, shout out to them. This is a great tool to see what sessions are. Okay, I live in the West Coast. All right. So New York session is from 5 a.m. to 2 p.m. for me. Okay. But realistically, New York session actually opens 9:30 a.m. This is just information that you know. So 6:30 is when open is. And then this is pre-market. So that means this is before the market opens, the movements, right? You can see how the volume is lower during that time. And the volume actually peaks at around 8:30 a.m., 7, 8 a.m. But yeah, I trade market open, which is 9:30, and I trade from 9:30 to the longest is probably. Oh, sorry, I was talking about Eastern time. I trade 6:30 to like the latest probably 7:30. I don't trade more than an hour. I don't stay on charts that late. But then there's another session. This is the Sydney session and the Tokyo. They are different, right? Of course. But we, in futures, it is Asian session opens at 3 p.m. Right? There's an hour break. And then it opens. So Sydney is trading during 3 p.m. And then actually the best time to trade Asia is during 5, influx of traders. 6 is the best. But 5, 6, 7, these are the best times for Asia session. They have the highest volume. Asia session is normally much lower volume. You can tell from the chart right here. And then there's London, right? London is when I'm sleeping, so you can just see it visually here, right? That's the foundation. That is the fundamentals video. So just a quick rundown on what it is exactly. You're probably confused, like, what is futures? And you don't really need to know what it exactly is. You just need a normal gist of, hey, futures is you're buying this contract that says in the future this price is here, and you'll make money if it is there. All right, that concludes chapter 1, fundamentals.